Hello and welcome to Pursuit's webinar on how to calculate your PPP loan amount. I'm Chris Levy, your host, Chief Credit Officer of Pursuit, and we are here today to talk about how to calculate the PPP loan amount for C Corps, S Corps, and nonprofit organizations. The purpose of today's webinar is to walk you through the application process and calculation of your loan amount for the PPP loan. As you are likely aware, the calculation is based on 2.5 times your average monthly payroll, or in the event of being a food service or accommodation business, 3.5 times the average monthly payroll. The purpose of today's webinar is to figure out how to calculate that average monthly payroll for a C Corp, S Corp, or nonprofit organization. We'll talk about the specific documents that you need to gather in order to fulfill this calculation, and also provide you with some examples so you can see what a real life calculation would look like. So let's get started by talking about what documents that you could possibly provide in order to calculate the average monthly payroll. If you use a third-party payroll provider, that should be your first source of information to calculate that average monthly payroll. If you have a company such as Paychex, ADP, Gusto, or JustWorks, that payroll provider will often have a spot for you to pull a report that is based specifically for the Paycheck Protection Program. This will be your annual payroll for 2019 or 2020. You can choose whichever one is higher, as that will garner the largest maximum loan size for your calculation. So first starting point and the best record that you can provide is from a third-party payroll provider. If you don't have a third party, don't worry about that. There are other ways that we're going to look to calculate your loan amount, including your tax forms. The first tax form that we have mentioned here is IRS Form 940. This is your annual federal unemployment tax form that is submitted to the IRS. As you can see here, the SBA requires you to calculate it based on box number 3, which is the total payments to all your employees. So that number will be a document and starting point that you can utilize. You can also use IRS Form 941, which is the quarterly tax payments for payroll taxes. You will have 4 of these statements, one for each quarter of the year. You can utilize the line 5C on this form and add those together for all 4 quarters of the year in order to calculate the average monthly payroll. Similarly, you also have state quarterly unemployment insurance tax reporting forms for each quarter of 2019 or 2020, which can be used depending on how your state filing works. In addition to salaries paid to employees, which is the gross salary that we're utilizing for this part of the calculation, employee benefits can also be included to calculate your maximum loan amount. This could include group health care, life insurance, disability, dental insurance, and retirement benefits. In order to calculate this, you need to provide statements that back these numbers up. That could be from your payroll processing records. It could be invoices from your provider or account statements from your provider. These again should be annualized statements for the entire year of 2019 or 2020, depending on which year you choose to utilize. In addition to these documents to calculate the average monthly payroll, we also need a document showing that the business was in operation as of February 15th, 2020. Typically, this is the payroll statement that incorporates that period to show that the business was in operation and had employees as of that date. Now we're going to move on to the steps to actually calculate the loan amount. The first step is going to be to add up all of the payroll costs that we talked about previously. This will include the gross salaries paid to employees. It will include those benefits, whether that's healthcare, retirement, and other fringe benefits that are incorporated into the average payroll cost. And we're going to add those together. If you need more information on what calculates as an eligible payroll cost, please see our payroll cost summary on our website. The SBA rules require a maximum amount of compensation to any one employee to be $100,000. So anybody that makes a gross salary of over $100,000 will have to be reduced out to reach that maximum limit. So we'll go through some examples, but a quick example of this case here, if you have an employee whose annual salary is $150,000, the maximum that can be calculated in terms of the Paycheck Protection Program for that single employee is $100,000. So as you calculate the entire amount of payroll, you would subtract out the $50,000 in excess of $100,000 from the calculation. Step 3 is to take the results from steps 1 and 2 and divide them by 12 to calculate your average monthly payroll cost. Obviously, the numbers that we talked about in those prior 2 steps were annualized numbers, and the calculation for the Paycheck Protection Program loan is based on the average monthly cost. So those total costs for the year and divide them by 12 to get your average monthly payroll costs. Then, in order to get our loan amount, we will multiply that by 2.5 times, generally for most industries. If you are assigned a NAICS code beginning with 7.2, which is accommodation and food service, so that would include industries such as restaurants and hotels, the second draw program allows you to calculate your loan amount by 3.5 times instead of 2.5. So that will garner a larger loan amount. From there, we have our average monthly payroll and then our maximum loan amount that you'll be able to apply for the Paycheck Protection Program. We're now going to go through some specific examples so that you can see what happens when we put these numbers to work. So for this example, let's assume that no employees make more than $100,000. When we look at your tax forms and your third-party payroll records, we found that the annual payroll for the company was $120,000. That's step 1. We then are going to divide that by 12 to get our average monthly payroll of $10,000. In this example, the industry was not one of those food service or accommodations, so the average monthly payroll will be multiplied by 2.5 times to get us a maximum loan amount of $25,000. We're going to look at a second example now. In this case, it's a little trickier where we have 2 employees that make over $100,000. One of them makes $110,000, the other makes $150,000. So that equates to $60,000 that is above the threshold of $100,000. So we're going to keep that money or keep that number to the side, and that we'll use that in the calculation in a second. In this example, the annual payroll based on those tax forms and third-party payroll reports gets us to $1.5 million. From there, we're going to take that $60,000 that we talked about previously and subtract it out. So we get a number of $1,440,000 that can be incorporated for the Paycheck Protection Program application. We will divide this number by 12 to get the average monthly payroll that qualifies for the program of $120,000. Again, this is assuming not a food service or accommodation business, so the average monthly payroll will be multiplied by 2.5 times to get us a maximum loan amount of $300,000. So based on this information, we hope that you'll be able to calculate your maximum loan amount for the Paycheck Protection Program if you're a C Corp, S Corp, or nonprofit. Our website has many helpful resources which we hope that you'll visit. Utilize these in order to get your questions answered before contacting Pursuit. This has the most up-to-date information and is geared towards our borrowers in order to help them as they embark on the application for the Paycheck Protection Program. Thanks for attending this webinar, and we appreciate your business.